Insurance markets are known for their cyclical nature, constantly shifting between soft and hard market conditions. While many are familiar with the concept of insurance, the term hard market may still seem elusive to some. Let us understand what hard market insurance is. During a soft market, insurers are eager to attract new business and retain existing clients. This leads to increased competition and a favourable environment for insurance buyers. Key characteristics of a soft market include lower premiums, increased capacity, and flexible underwriting. Insurers offer reduced premiums and enhanced coverage terms to gain a competitive edge and secure market share in lower premiums. Insurance carriers are more willing to underwrite risks and provide broader coverage options as they seek to expand their portfolios, hence increasing capacity. Insurers may be more lenient in underwriting guidelines, offering more flexibility to policyholders. Insurance buyers can leverage these conditions to their advantage by exploring new options, negotiating with incumbent insurers, and obtaining more comprehensive coverage at affordable rates. Just like any industry, the insurance market goes through peaks and troughs. A hard market is the upswing in a market cycle when premiums increase and capacity for most types of insurance decreases. This is what an expert described what a hard market is. To grasp the concept of hard market insurance, it is essential to understand the basic principles and characteristics that distinguish it from a soft market insurance. Insurers tighten their underwriting guidelines in a hard market. Premiums rise significantly and coverage becomes scarcer. These conditions create a challenging environment for policyholders and insurance buyers. Several factors contribute to the emergence of hard market insurance. Understanding these causes is crucial in comprehending the forces that shape the insurance landscape. Increased claims and losses, a surge in catastrophic events, natural disasters, or large-scale claims can deplete insurance companies' reserves, leading to a shift towards a hard market. Economic factors. Economic downturns, low interest rate environments, and inflationary pressures can impact insurers' profitability, prompting them to adopt more conservative underwriting practices. Regulatory changes. Stringent regulations or changes in legal environments can affect insurers' ability to manage risks effectively, leading to hardening markets. Underwriting cycle. Insurance markets operate in cycles, with periods of soft and hard markets. As the underwriting cycle swings towards a hard market, insurers become more cautious and conservative in their approach. Catastrophic events. When a major catastrophe occurs, such as a hurricane or earthquake, it can lead to a hard market. This is because insurance companies have to pay out a lot of claims in a short period of time, which can deplete their reserves. War on terrorism. War on terrorism can also lead to a hard market. This is because insurance companies have to pay out claims for property damage, business interruption, and other losses. New laws and regulations. New laws and regulations can also make it more difficult for insurance companies to operate. This can lead to higher premiums or stricter underwriting standards. The impacts of hard market insurance extend beyond higher premiums and reduced coverage options. It affects various stakeholders in the insurance ecosystem, each experiencing distinct consequences. Policyholders and insurance buyers. Higher premiums and decreased availability of coverage place a significant burden on individuals, families, and businesses, making it challenging to obtain the necessary insurance protection. Insurance companies. While insurance companies may benefit from increased premiums during a hard market, they face challenges in managing risks, retaining customers, and balancing profitability. Insurance brokers and agents. Brokers and agents act as intermediaries between insurers and policyholders. In a hard market, they must navigate the complex landscape, find suitable coverage options, and provide expert advice to their clients. Reinsurers. Reinsurers, who provide insurance coverage to insurance companies, face the consequences of a hard market. They may experience higher claims costs and increased demand for primary insurers. Regulatory bodies. Regulatory bodies play a crucial role in monitoring insurance markets. During a hard market, they must balance protecting policyholders' interests and ensuring the stability of the insurance industry. While hard market insurance presents challenges, policyholders, insurance buyers, and insurance professionals can adopt proactive strategies to mitigate its effects. Here are some key considerations for you. Risk management. Enhance risk management practices within your organisation to minimise potential losses and demonstrate your commitment to risk mitigation to insurers. Insurance Program Review. Conduct a thorough review of your existing insurance program, identifying potential coverage gaps and areas for improvement. Work closely with your insurance broker to negotiate favourable terms and explore alternative coverage options. Alternative risk transfer solutions. Consider alternative risk transfer mechanisms such as captives, self-insurance, or risk-sharing arrangements to diversify risk and reduce reliance on traditional insurance markets. Loss control measures. Implement robust loss control measures and risk prevention strategies to demonstrate your commitment to risk reduction, potentially improving your negotiating position with insurers. Partnership with insurance professionals. Establish a strong partnership with knowledgeable insurance brokers and risk management advisors who can provide guidance, navigate the complex market, and negotiate on your behalf. Insurance markets are dynamic and subject to continuous change. As the industry evolves, it is crucial to anticipate future trends and adapt accordingly. Technological advancements. The integration of emerging technologies such as artificial intelligence, blockchain, and data analytics is transforming the insurance landscape, enabling more accurate risk assessments and pricing models. Climate change and sustainability. The increasing frequency and severity of climate-related events necessitates a re-evaluation of risk models, pricing structures, and coverage options. Cybersecurity risks. The escalating threat of cyber attacks requires insurers to develop specialized coverages and risk management solutions, reflecting the evolving nature of digital risks. Regulatory landscapes. Evolving regulations, consumer demands, and societal shifts may influence insurance markets dynamics, shaping the underwriting cycle and market conditions. Now let us go through some examples. Global financial crisis and the commercial insurance market. The global financial crisis of 2008 had far-reaching effects that extended beyond the banking and housing sectors. Insurers, too, faced significant challenges during this period. As the crisis unfolded, investment portfolios suffered, interest rates plummeted, and economic uncertainty prevailed. These factors, coupled with increased claims in various lines of business, contributed to a hard market insurance environment in the commercial insurance sector. Insurers tightened underwriting standards, increased premiums, and reduced capacity, particularly in areas such as directors' and officers' liability insurance and property insurance for high-value assets. Businesses faced the double impact of a struggling economy and the difficulty of obtaining affordable insurance coverage. Professional liability insurance and the medical malpractice crisis. In the early 2000s, the medical malpractice insurance market faced a crisis due to rising claim costs and a surge in litigation against healthcare professionals. As a result, insurers struggled to maintain profitability, leading to a hard market for professional liability insurance. Premiums skyrocketed and coverage options became limited, particularly for high-risk specialities such as obstetrics and neurosurgery. Healthcare providers already grappling with increasing medical expenses face mounting financial pressures as they strive to secure adequate malpractice coverage. The crisis shed light on the challenges of underwriting risks in the healthcare sector and its impact on the availability and affordability of professional liability insurance. Hurricane Katrina and the property insurance market. Hurricane Katrina, which struck off the Gulf Coast of the United States in 2005, stands as one of the costliest natural disasters in history. The immense damage caused by the hurricane, particularly in New Orleans, resulted in a substantial increase in property insurance claims. Insurers faced massive losses, prompting a tightening of underwriting guidelines and a surge in premiums in the property insurance market. Homeowners and businesses experienced significant difficulties in obtaining affordable coverage and were often subject to coverage limitations and higher deductibles, reflecting the challenges of a hard market insurance. Is the insurance market hard right now? The insurance market is constantly changing, so it is difficult to say definitely whether it is hard right now. However, there are some signs that the market may be headed in that direction. For example, premiums have been rising in some lines of insurance, and underwriting standards have been tightening. Additionally, there is some economic uncertainty which could lead to further tightening of the market. By adopting proactive risk management practices, leveraging the expertise of insurance professionals, and staying attuned to emerging trends, you can navigate the shifting tides of insurance markets, ensuring the protection and resilience of your assets in even the harshest conditions. Remember, knowledge is a compass that will guide you through the intricate realm of insurance, no matter how turbulent the market may be. We hope you learned something new today. If you have further queries, feel free to comment below. Also, do not hesitate to tap the thumbs up if you have liked this video. We will be meeting soon with yet another amazing piece of content. Till then, it is a goodbye.